What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol APPS for Digital Turbine Inc. On the left-hand side, we are looking at the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First thing I want to point out is that this one did suffer a pretty intense blow to the downside after the earnings announcement. When we covered it, of course, we were looking for the breakout up and over 66.58, but as the chart currently sits, I'm hoping that you stopped out. You had the discipline to stop out. In this case, your stop loss would have gone underneath the support trend line somewhere in here. Basically, even if you took the worst case scenario and stopped out underneath the low of the range here, you would have been stopping out around 59.35. You would have avoided this much more pain. So please use a stop loss when you're trading. This is not a zero-sum game, right? You can take a small loss. You don't have to let your options go to zero or your position completely fall apart. Small rant over. Regardless, let's see what we can do going forward about this into the remainder of the week. So obviously on today's activity, we broke down underneath our last support that we had mapped out. So let's go ahead and just point out that we did kind of close right around this 53, the true low of this potential double bottom that we could form here from this prior pivot low. Underneath that, what do we have? Well, looking left, I would argue there's some room to fall all the way towards 14.15. We'll see what happens when we get there. The daily outlook isn't that great, just simply based on the structure of today's candle. Inverted hammer would tell us in that upper wick that people were selling this aggressively on the move back higher whenever that was, first 30 minutes of the day, I would imagine. So let's zoom in on this chart on the 30-minute time frame side and see what went on. So that being said, a very interesting open actually. I honestly was not watching this intraday, so let's see what was going on. If we do a Fibonacci retracement from the low to the high of that opening 30 minutes, what happened on the initial rebound here is we went to the 38.2, essentially the inverse, right? The 61.8 there because we just flipped around our directions. But nonetheless, we went to that 54 mark and then we rolled over, right? So you can see based on this green inverted hammer right here, we did roll over on the back test. That's indicating to us, of course, that that was a relatively weak close that we got here. Consolidation in that lower 30% definitely on today's action. So looking weak, looking like it could go lower. We know that the pop was met with some serious selling activity at that prior support we had mapped out around 56.34. So any upside at 56.34 should be met with some more selling. We simply know that because of the upper wicks that were put in and the hard rejection that we saw off of it. The other thing that we need to point out is the 50 SMA is barreling down to the downside. I would expect that to act as resistance on a first touch. Let's zoom this chart out slightly now and just kind of lay off the intensity for a minute and just draw in a nice lazy resistance trend line, something that would look like this. You can see it's been in effect for some time now. So anchor, here is your first touch, second touch, third touch, and fourth touch on today's high. So that could also act as resistance to the upside before we move lower, forming another lower high. So this would be LH. Of course, everything that we've mapped out prior would be lower highs from this high, the major high that we set on that first little pop, but the resistance trend line is intact. Given the oversold, I say that word very, very lightly because things can remain oversold, they can remain overbought, but given the nature of this move to the downside, nearly, what is this, 1, 2, 3, 4, 5, 6 red candles in a row, not for nothing, it wouldn't be a surprise to me if we saw a small-bodied green candle down here, a little bit of indecision, a pause for the sellers before potentially continuing lower, okay? So it's not the end of the world. If you see a green candle, it doesn't mean it's just going to rip all the way back up towards those highs. It's just a breath for the sellers. For now, I would try to avoid being long apps and potentially look for a short-sided trade if we get a little bit of a dead cat bounce, right? If you get something like this, look to short this area now this time and look for the rollover here. Checking in on the trade tab, then we'll wrap it up here. You can do it with shares. You can see the easy to borrow, and the option chain also looks okay, right? It's not the greatest, honestly, in terms of volume that's actually transacting here in terms of large size, but open interest is there. It generally feels like a regular options chain. So all that considered, you could do it via puts as well. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, we wish you a green trading week.